committee. I was just here last night running the warrant committee meeting, so I'm just sort of in the mode. Just a couple of quick announcements. Brian Henkel, who's been our recording secretary for over the last couple of years, is taking a job with the town. He's now our director of public works. So it is a conflict of interest to be on the investment committee. So seeing he's now officially in the town employee. So we will need to have someone take minutes or be a secretary for the committee. I want to also welcome Jason Irwin joining the committee.
Thanks,
Jason brings a lot of knowledge he's the CFO at Friends of Acadia and also is a private CPA on his own. And I've had the great privilege of meeting him in my boat shop by chance. And when Brian left, I thought that Jason would be a really excellent fit. So thank you for being willing to join us. And I hope you find it all interesting. I think as a town, we're a very unique town. There are not very many towns that have this type of portfolio at their disposal. I think there are lots of small towns in America that would cut off fingers to have what we have. So there's a great responsibility that comes with that. With that said, I'll let our finance director, Jake Wright, take over the meeting.
Okay. So first call to order, that's done. Second, review of November 2nd, 2022 meeting minutes. Did everyone have a chance to review those? And we don't have, so Wendy said that she wasn't going to be able to come. She had something come up at the last minute. And with JB not here, we don't have a quorum, but we can still go over.
Which probably want to prove this.
We've already missed two people out of, let's see, 1, 2, or you can,
These six, we're considered like ad hoc.
I see.
You can't vote.
You can't vote. So Wendy Littlefield is the representative for the Board of Selectmen, and I guess I sit here today as a representative of the warrant committee, and I guess we'll have Jason be the citizen. So we'll need one more citizen.
Right, because JB will be gone in April.
So we still need to recruit one more member. Megan Bailey's husband might be a very interesting person to add. Have you met him?
No, I haven't met him.
I think he's an adjunct professor in finance at the University of Maine. I think he works with Hancock County at the planning office. So I'll reach out to see if I can get him to join. He's relatively young and be a good addition.
Yeah, I would think so. It's perfect.
We participate as ex officio members.
So, my afterguard here don't count. So we don't have a quorum, but we can still carry on the meeting. We just can't vote, right? We can't elect a secretary. And so between the three of us, we'll take some brief minutes. Is that good?
Yeah, I can take some more. Yeah, so we won't be able to vote on accepting the minutes. We'll pass that. We can't accept the resignation of Brian. We did welcome Jason Irwin to the investment committee. We're happy to have him. Can't elect a secretary, but we can, let's go to item 6, review of investment performance, quarter 4 2022 reports from First National Wealth Management. Matt, do you want to kind of go on that?
Yeah, sure. Happy to do that, Jake. And it's been a while since I've joined you folks. I think back in the summer of 22, I was recovering from my second bout of COVID. So I think Pete joined you folks for that meeting. But I thought I'd start with doing a look back here and taking a look at the performance report, which has a pie chart there. It shows the 22 performance against the benchmarks. So looking at that, we can see some outperformance there versus the blended benchmark of just under 100 basis points. We're pleased that we kept our exposure to long-term bonds to a minimum. In fact, looking at the maturities report today, our longest bond right now is 8/16/27. So that gives you an idea.
We're just joined by JB.
Late for the last time.
Late.
So we have a very short ladder here of approximately 4 years or so. We've got about 4 or 5 individual positions coming due here over the next 6 to 7 months, which we'll be able to reinvest into higher yielding instruments. But yeah, going back to the performance here, as you know, we are using index funds on the equity side. We've been doing that since day one. I think that's what we're doing here for many of the municipalities that we work with. Low cost index funds give you broad exposure to all markets, and we feel that's the most prudent way to invest for municipalities. You can see at the bottom of the individual asset classes here with fixed income, that's where we outperformed. And again, when you have a short-term bond portfolio going out only 4 years against an intermediate benchmark, you would expect to outperform. And along with the short-term nature of the fixed income investments, we also had the inflation protected bonds in that portfolio, which on a relative basis held up better than some of the other bond classes. So with that, and what I've told many of our municipal clients about these rate hikes, we've had some short-term pain, obviously, but long-term, for folks who have balanced portfolios or have a majority of fixed income investments in their portfolio, your bonds are going to be throwing off higher returns going forward. And I think we'll be looking to do that, and maybe moving some of these funds from inflation protected and some of the bond funds, which are in there for a number of purposes, not only hedging, but also for liquidity. If we need a large distribution from the town, we want to have those bond funds in there to provide that liquidity when called upon. And I think what we're going to do here over the next 5 or 6 months is start to move not only bonds that are coming due and rolling them into higher yielding investments, but also for some of the bond allocations, we're going to do that as well. And the sweet spot right now is 1 year. You all know we have an inverted yield curve. And so if you look at the inventories out there that were sent to us on a daily basis, you're not getting rewarded for going out 3 or 4 years. You're looking at maybe 10 or 15 basis points over 1 year. And to me, the risk return just doesn't make a lot of sense. I'd prefer to have the flexibility of a short-term portfolio and having these things roll over here in a year and see where we're at. I personally think that the Fed's going to keep rates higher longer. And if that's the case, then, we want to keep this portfolio short-term and in that sweet spot of 1 year, maybe 18 months, and roll that over into possibly higher rates a year from now. So in terms of the equity side, you'll notice we kept equity closer to 40% for the entire year. Your range in the policy is 40 to 60, which I've told you in the past, I think is the way to go for policies, to have that range so that the advisor has the flexibility to move, from when we see data that suggests, we're going to have better times ahead, then we start to move that needle up. And, by the end of this year, we'll see where we're at. I really think that some of the markets overseas are going to recover, or the economies are going to recover quicker than domestic. So, we may add to that EM exposure and the large cap international exposure. And I think what we've seen in January here in domestic markets is a classic bear market rally. And I just think that we're going to retrace. And our committee met yesterday, and that was the consensus from all of my portfolio managers. And I think that'll be time for us to be a little strategic and to make some moves and add to some of the allocations in the markets that we are exposed to. The one thing I'm considering, and I'd like to hear your comments on this, is Vanguard has a S&P 500 value fund and an S&P 500 growth fund. So they split up that benchmark. And my thought process is that, this has been a value market since the Fed started to raise rates. But that's going to reverse, and we're going to see, some of these growth names come back when we sort of rotate in the market, and who knows when that's going to be. But my gut feeling is that later this year, maybe fourth quarter, we'll want to have a slight bias to growth over value going forward. So my thought is to possibly break up this S&P 500 ETF in the portfolio into a value and growth components, and then just have a little bit of flexibility with we're not going to go wholesale on one side or the other, but just to have a slight bias either way and provide alpha to the town, by being a little bit more strategic than we have been in the past. So love to hear your comments on that. And, I'm a big proponent of looking at behavioral finance and how biases can affect, most of the time it's a negative effect on portfolios that sometimes advisors have. And, I tell my portfolio managers, we want to avoid doing that. But we also, want to be strategic at times and again, provide that alpha to our clients. So that's my thought process for 23, and love to hear your comments.
You're the manager. If you, I think I'm all for diversification.
Well, that's what broad-based ETFs, that's not only did they provide you with a low cost entry into all of these markets, EM funds, typically managed EM funds have expense ratios well over 1%. And we certainly don't want to burden the long-term performance when you have expense ratios eating in to the return. So that's why, I've always been a Jack Bogle fan, who passed away several years ago, who started Vanguard back in the early 70s. And for the individual investor and for institutional investors out there that use ETFs, he's been I think the most important person in the last 50 years in terms of providing this exposure to markets at a very, very low cost.
One question, you said our equity position was close to 40. Am I reading the December wrong? It's only at 36.
Yeah, that's popped up a little bit. We've had a pretty good run in January. The return, unaudited return, I don't have our performance vendor numbers yet, but over 4%. And so I think we're closer to 39 now, so just under that. But
that's outside our range, right?
Just a slightly outside. Yeah. No comments on that. So I guess we have a green light to do that. Like I said, it'll probably be later this year when we, see the Fed. First, we want the Fed to obviously pause these rate hikes, and I think that'll certainly help at least the long term will help growth stocks come back. But that it's certainly been a value market here. The Dow was down about 11% last year versus the S&P down almost 20%. So we're going to keep that, I think, the value and growth exposure, in that ETF that we have now, and then we'll see where we're going to go here later this year.
I think once the market fears are over, I think it'll be a big, it's a hard read, and I think we have to trust you all to take the temperature. It's not really our place to, micromanage, that's what we hired you all to do.
That's right. Yep. By the way, just want to tell you, this policy is one that I often bring up to other municipalities because of that range that you give us, the 40-60. That's not very common in policies across the state. So I think it's, for us, giving us that flexibility to, provide that alpha, and not just to be, at a fixed 60-40 or 50-50 allocation. That's what you see generally with policies. I like the fact that we have that flexibility. So kudos to who wrote that years ago.
Matt, can you speak a little bit that you had also included a little bit of benchmarking for ESG? Could you talk a little bit about kind of where that lines up, and also what our performance would have been like if we had kind of gone that route in 2022?
Performance would have suffered on a relative basis without any exposure to fossil fuels. Energy was the sector to be in 22. So you also see a lot of the ESG funds have an overweight to tech, because a lot of these large cap tech companies, it's in their mandates, in their that's how they run their business, is having that ESG slant. And whether it's Microsoft, Google, they are very committed to ESG as a company. You also see it in some of the large banks, like JP Morgan and Jamie Dimon. They have that that ESG bias. But this is what I tell individual clients, and our footprint is in the coast of Maine. We have a lot of land trusts here, and we just have a lot of retirees coming in from New York and other parts of the East Coast, and they're very passionate about ESG. And I tell them that, I don't have an issue with adding ESG as a component to the portfolio, but I would not recommend having an entire ESG portfolio because of the overweight in tech, the underweight in energy. I prefer to have broad-based investments in portfolios. So I get it. I'm socially responsible myself, but I think if you want it to be a 10% component of the domestic large cap allocation, sure. But I just think there's risk there when you admit one sector, or if you're overweight another sector, it's going to hurt, especially in a year like 22, when energy was really the only sector that performed well.
Thank you. Anything else from Matt?
I think so.
Okay, thank you very much, Matt.
Thank you.
You're welcome.
And thank you for you and your team for, doing as well as you did, in a really downturn in time.
Yeah, I second that.
Yeah, thank you. And the money market rate here is now we're getting north of 4%. So that's another asset class in the portfolio that it's risk free. And we talked about as a committee yesterday, moving that up as well. So you may see higher, cash allocation this year, but it's finally an asset class that's throwing off a real return, as opposed to the last 10 years or so where, you're getting 0.25 on those money market funds. If you see a 5 or 6 or 7% allocation in money market, that's the reason, because you're actually getting a return. So
Makes good sense.
Yep.
So I think if we're good on item 6, we may want to circle back and address some of the items that we had gone over because we didn't have a quorum. Item 2 was review and accept of 11/2/22 minutes. Do I have a motion?
So moved.
Seconded.
A little slow at doing minutes.
Any discussion?
Hearing none, all in favor?
Aye.
Okay. Item 3, accept resignation of Brian Hinkle from the investment committee. Do I have a motion?
So moved.
And seconded. And we want to acknowledge Brian's presence and taking, being involved and really bringing a good, some really good points to a lot of our discussions. He had a really good fiscal sense and he will be missed, but we're very lucky as a town to have him being our director of public works.
All in favor?
Aye.
Item 4, welcome Jason Irwin to the investment committee. We'll do it again.
Welcome again.
Item 5, elect secretary to replace Brian Hinkle.
That would be Jason. Or are you the secretary now?
I had been the secretary in the past.
You're the chair now.
Oh, you're the chair.
Oh, no, am I? I haven't
Yes.
been elected.
Well, you're about to be.
Yeah.
I have
We'll have to-
4 weeks.
we'll have to decide that at
So-
the next meeting.
He's a short timer.
I'm moving to Bar Harbor. So I nominate Jason as secretary.
Guys, this is my first meeting with you all. There must be someone else who can serve as secretary. I don't want to jump in that fast. Let's take it slow, please.
Let's be fair,
Let's wait till we get your new person.
let's
Yeah.
wait till-
Okay.
let's hold off on election of officers. I'm willing to be the chair,
Interim chair.
intern chair until we have a full committee. Is that fair?
Can you have a committee of 2?
No,
No.
we can't. We need a quorum, so
Well, if when I resign, you'll have a committee of 2.
Well, Wendy is also still on the.
Oh,
as the chair.
She's also at,
I think that the only ones that are referred to as ex officio is us.
The two of you, your employees.
huh,
oh, that may be true.
And Wendy's an elected official. I'm not, I'm an appointed official as the warrant committee.
I was appointed.
Jason, you're a citizen. It keeps you, it
He's
keeps you
appointed.
safe for today. I've reached out to another person I think would be good for the committee, and hopefully by the time we get to our next meeting, what we meet again in April.
I think that was
I think we meet quarterly,
April or early May.
so possibly after town meeting, which probably
Should
be.
have that other person, hopefully.
So I'd say by then we could get them approved, board of selectmen approval, and we'll elect officers then.
But you're really looking for 2, right?
Yeah.
Correct.
Okay.
Okay, so we'll table election of. Commissioners.
Any other questions of Amanda and Matt while we have them on the call?
Did they did they get the draft investment policy?
Well, we haven't finalized our proposals yet. That was
Okay.
what we were talking about today. As of right now, the only firm thing that I think we had really decided on was adding insured cash sweep to the list of acceptable short-term fund locations. Other than that, I don't know if we've really decided on anything. The only other big conversation was about possible ESG allocation.
And we got their opinion.
So I thought we would go over it again today, but as of right now, I don't think there's anything for them to really review.
Okay. And
Unless we decide to make some big changes when we get to that item. In which case I will send it over to Matt and see what their thoughts are, but
that's mine.
I mean, honestly, I think we originally started this out thinking that we were gonna have some major overhauls, but I'm not aware of anything big right now.
Correct.
And we may not, I mean, if it's just the insured cash sweep, right now, those funds that we were talking about, that classification are held in the money market account that's doing slightly better than our insured cash sweep, and so we would have no incentive to move those over anyway. So I'm not even sure that it's a pressing issue.
Okay.
So I would say no. Do we want to let them go?
Yeah.
So we'll let Amanda, we'll let you go back and do what you do best for us.
Very good. Nice to see you all.
Likewise,
you.
thank you.
Thank
Keep
you,
up the
guys.
good work, please.
Thank you.
All
right.
Item 7 was, see, review quarter
Yeah.
4, 2022 cash equivalents. That's all the reports that I provide. Did anyone have any questions about that?
Nope.
Okay.
Nope.
And then, so no action necessary. 9 was consider possible reallocation. Oh, did we skip over?
Oh, the investment policy.
Yes, review investment policy and finalize amendments. Let me share my screen. We can kind of go through the investment policy together, make sure we're on the same page.
Matt mentioned that the struggle with ESG and in the nonprofit sector of the fiduciary responsibility. The town has the same, is held to the same standards, right? It's a tough nut.
Well, the way I look at it, we need to do good, but we need to do well at doing good.
Right.
So,
But it just puts a little bit of a constraint on decision, you know, in a nonprofit or the municipality, you have to look out for all viewpoints, not just your own.
Yeah, well, it seems to me like, you know, it should be trying to make as much money as we can and then use that in a socially responsible way,
True.
you know.
My own personal investing, you know, I own no big tobacco and I know defense contractors and no big oil
Right.
on purpose. That's a personal choice.
yeah,
I don't know if I'm in a place I prefer that the town did not own big tobacco having a, you know, and I speak up on that. I think there are many citizens that would care about something like that. I think the oil piece becomes very different, you know, energy becomes a very difficult place. And I think we enter in a micromanagement camp for them, defense contractors, that's a.
The issue is the composite funds that they invest in. Yeah.
Right, they would take them out off the table completely.
Right.
But you feel like they would lose that Vanguard fund, right?
Right.
Or if they were a Spider or any of the other ETF style funds.
I mean, we could have I agree with them, maybe a portion.
The 10%, up to 10%. And what do you think of that, Jason? You work for a nonprofit and, you know, with a high social responsibility, you know, clientele. This is where I think would be a great time to reel you in on this in your opinion, because I bet you have one.
I do have an opinion on ESG investing. So with Friends of Acadia, we went to the board because we heard from the board they did not want to be involved in big oil. So we went to them and said, are you willing to accept a reduced rate of potential return in exchange for this initiative? And they said yes. So when we go back to them with 2022 results and say, hey, we missed out on the rally in energy stocks, but that's something that we were able to predict because you mandated us getting out of these stocks, they'll be okay with that. There'll be some grumbling, but you know, we're not serving as a complete 100% fiduciary because we're not investing where the biggest potential rate of return is. But with a board vote saying yes, as representatives of the membership of Friends of Acadia, we're okay with this. That said, the biggest investors in renewable energy are the big oil energy companies. So we also aren't able to say we're participating in this expansion into hydrogen, solar, wind, tidal energy, because guess who's the investor there? It's BP, it's Royal Dutch Shell. And then we've had discussions at our investment committee around, well, where do you draw the line? Do you get out of sugar production? Do you dump your Coca-Cola stock? Do you get rid of, like you mentioned, Phil, defense contractors, tobacco companies? Well, Altria also is in consumer goods like, boxed food, canned goods, these businesses have so many arms these days. Just being able to divest from one company that solely does, say, coal is almost impossible now. How about get rid of the train companies, CSX, because they haul the coal? So it's a slippery slope, in my opinion. I don't advise any of my clients to go into any of these funds unless it is a personal passion that they want to be willing to accept some additional risk in their portfolios for. Advising a town like Mount Desert or an organization like Friends of Acadia, my personal opinion is no, steer clear, stick with a diversified portfolio without regard to political issues, personal opinions.
Because there's plenty of opinions in this town, and just because, the handful of us that are here today might have our own personal feelings, and, I really appreciate what Matt said. He said, so he personally wants to live his own life socially responsible. I want to live my own life. But I know there's many citizens in the town that would not be very happy with us if we went and didn't diversify.
Yeah.
Question, Jason.
Sure.
So when the board takes an action like that, some people have said to me they open themselves to a disgruntled member of Friends of Acadia. They weren't concerned.
Off the record, yes, we have some of those who are not happy with our fossil fuel free mandate.
To the point of personal litigation.
Well, we fortunately haven't had to go down that road, but if that happens, fortunately, we have some attorneys on our board who would probably step up pro bono to defend us.
Right, but that
you
is,
do-
that has happened elsewhere.
I think
Yep.
from our perspective, it would be baked into an amendment to the investment policy, which would be approved at town meeting. And so I don't see how there would be any liability from our perspective.
True.
Because our governance is the town meeting,
Right. Somebody can grumble all they want.
right? But you
didn't vote it down.
You
They were
asked that, or
outvoted.
or you didn't show, you can't proxy, you need to be in the room.
Right,
We run into this all the time.
right. Okay.
Agreed.
That was really helpful, Jason. Thank you so much for that. I think, it makes us all on the same page, and I think you see it smartly, and you now, in your own life, you see both sides.
Oh, absolutely. And so where you were going a few minutes ago about, we'd lose that Vanguard fund. Yes, and you'd have the first or their active managers create a custom index fund that would pull out certain select industries or companies by name. And that's what we've done with our custom index funds, because our board wants to see 100% out of fossil fuels. So we work with Goldman Sachs, and they've created a whole bucket of customized funds for us at a higher cost, but it's a cost we're willing to absorb.
Something we could possibly look at in the future, but I think in our particular case, it's very difficult. I mean, we do, as a town, I gotta speak up again, I'll put my sustainability committee hat on, we do have a climate emergency declared in town. So does that influence that in any way? Where the town is trying to do as much as it can to extinguish our dependency on fossil fuel and carbon emissions.
Mhm.
So that's something, and if we had to defend it at a town meeting, I think the town already enacted that plan.
I think Derwin's point is well taken. To do good, you have to do well,
Yes.
and
I-
that satisfies, I mean, that to me satisfies all segments of the community.
It's like, what was it Michael Jordan said, Republicans buy sneakers too?
Yeah.
Buy independent,
Agreed.
agree that, so we have, we have a mix, not everyone.
We don't have an elected, we're like FOA or any environmental group has an elected board. They have determined this is the way that, they want to do it. In our case, we have, we're talking about Main Street. We have a very diversified community. And yes, we do have a lot of there would be naysayers on this, and we have a lot of like, I'm for it.
Yeah.
It's complicated. But like you say, I think the other point that Jason makes that's really smart and clever, even if you think you're clean, you're not clean.
And you also can't take part in some of the alternative energy sources like.
For sure.
Because they've got them locked up, so. Yeah, I kind of like what Matt's idea was, is to have a component, but I wouldn't.
So to do, are we favorable to do, like he said, I think I heard the percentage was about 10%. What do you think of that, Jason, to have an ESG for about 10% of the portfolio?
No, I'm okay with that. And that covers us if a member of the town asks, hey, are we doing anything with ESG investing? We can say, yeah, it's a part of our portfolio. It's a 10% component, part of a well-diversified portfolio. I would be opposed to making the entire portfolio or a really significant piece of the portfolio focused on ESG. And then we would have to really determine what the components are that we are excluding from the portfolio.
And with confidence that you actually were removing are you as clean as you think you are?
Right. Is it 10% of our equity holding or 10% of the
I
portfolio?
was just about to ask that.
I don't know.
I would say
Need to
10%
clarify, yeah.
10% of the equity side.
Yep, I like that.
Portfolio would be a chunk,
Right, too much.
too much.
Good
Agreed.
point.
And so that would have to, if it's 10% of the equity allocation, which is a moving target, because they're constantly changing that, then every time they want to do a reallocation, they would have to amend the allocation of the ESG portfolio as well. So it's another step on First National side.
Right. We should have, I mean, when we present, call this out for them, is this going to be a burden for you?
I can follow up on that.
Yeah, I think we want to get some kind of an opinion out of them and some guidance.
I mean, the fact that they don't adhere strictly to our allocation makes me think
There's wiggle room,
there's wiggle room.
Well,
which is
I think-
favorable to the town, yes?
when you say they don't strictly adhere to it, what do you mean?
Well, in December, they were under our limit.
Isn't the equity 35%?
Oh, he said 40.
Yeah, I think it got thrown around. I started jumping, but if you, the
Okay.
investment policy that I have
Oh,
right here is
okay.
35 and
He said
65.
40, so that,
I
I'm
think,
sorry.
He
I
said,
think
he
he may
said
have-
40-60, he did say 40-60 on the call.
He did.
Right.
So,
I may go back and look at the original investment policy. Maybe it's kind of an outdated version. But he might have also just been talking round numbers. I don't know.
right,
well, let's
okay,
make sure, we should get that right, though. You know, if we are rewriting some of this guidance
Right.
up and working on it, this is a working document,
yeah, he
correct?
said 40-60 and we're 35-65.
I'll look into that. I know that I'm pretty sure that I did provide, just to make sure we were on the same page when I first started here, I provided the copy that I had, and I think we're on the same page. I think he was talking in round numbers, but
Okay.
I could be wrong.
I don't think the 5% is gonna sink us.
Right.
Yeah,
Well,
so I think what
okay,
would probably be helpful is if we go through, identify things and then put our recommendations into kind of a motion. And then I'll put it all together and reach out to First National about if they have any problems with any of this.
on the ESG, maybe we just 7 to 12.
Oh, give them a range that way.
They
Okay,
like that. I mean, it sounds like it's a word, I like that too, where it's a moving target. I think it gives them a lot of room to. What do you think of that, Jason? Do you like the 7 to 12 idea?
I like the 7 to 12 and yeah, let them put it in an ESG index fund that already exists rather than custom building one for us.
I think that's and let's even put that right in that.
Yeah.
Preferably, right, preferably an existing fund, ESG fund.
Well, I don't think with our portfolio, they have access to custom.
Well, what happens when you go custom, your rate of return changes. You're gonna pay a premium for that type of
But
service.
again, it's a function of how much money you're talking. Right.
Well, our fee is what, 0.75%? We have quite low, most nonprofits are about 0.75%, right? We have, and the quantity that we have in equity is quite high. So I think that's about the lowest rate most will do, right?
Right.
one of the things that Matt and I did talk about before this meeting was that not all ESG funds are created equal, and that's actually what makes it really hard to benchmark against. Because they're all kind of unique products.
Yeah.
And so if we say an existing ESG fund, I'm not sure that gives them any guidance. Are we saying that they get to decide what ESG fund they want, or would that be an investment committee decision that we?
I think it's us micromanaging. We don't want to micromanage them.
I think the ESG funds are defined by type, right? And
Right, okay, and so they would just choose the most advantageous of that category.
right.
Okay,
I mean, to get the ESG designation, you have to jump through some hoops. There is variability, and no one's 100% clean.
okay,
I would just note that on their performance, that's gross of, that chart is gross of fees. So they missed the benchmark except in the down market. They did very well in the down market, but in the up market, it's the
summary one.
It's like rate of return, right? So it's 11.82. I think the highest we've seen, Jason, from these guys have been, but I think they were as high as like 20.9 in the 19-20 range was the highest we've seen since I've been involved. We met with that summer day that we met on like on a June day here. It was really hot and we were like up around 20%, which I, was pretty impressed.
That must have been 2020, 2021.
Yeah,
Yes,
Yeah.
they were killing it,
yeah. Oh,
like
but
everybody.
Yep.
it's the Parker and Anderson report at the end. They have a chart for 1 year, 3 year, 5 year, 8 year. Know what you got? It's at the end. Nope. What is it?
What was the title? Oh, I see.
That one.
That one. Yeah, that one. Yeah, sure, zoom out a little bit. Oh, no, I have more years.
What's the title of that?
I can't. 2387 _ Parker and Anderson.
Oh, that was one that was just sent out by First National.
No, that came with yours.
Oh, I meant the title of the PDF, 6 something.
Right, we received
Well-
something from them about 2.5 weeks ago.
Oh, this is one of the attachments in today's meeting.
Is this?
There it is.
Okay.
There it is. So when you take off 75 basis points, the only years they beat the benchmark or was those in the down market. Which is nothing to sneeze at, but they're not that far off, but just to bear in mind. That would be one thing for, Jason, what's your opinion on us constructing our own benchmark to put in the investment policy?
Yeah, you could do that. You could leverage some of the data like from Barclays or, something that more closely mirrors the investment portfolio. In my experience, I've rarely seen a financial advisor manager who can regularly beat the benchmark outside of the private equity space. So this is consistent with every organization that I've been a part of. The investment managers almost never consistently beat or even match the benchmark, especially once you subtract their fees on top of the fund leveraged fees.
Right. I mean, these returns include the fund fees, but not their management fee.
Okay,
It's just that 75 basis points that's left out. The only advantage I see to our own benchmark is that they can't change it on us. Right.
right.
Which they do on occasion when. But the fact that we're not far off is, I agree with Jason.
It's so slight.
Yes, and nobody beats the benchmark typically.
Looking on the upside there at the last. It's still,
I know,
just dab.
and they're doing better than other local institutions.
Correct.
It's important to realize. Okay, it's like beating the casinos.
Right.
Yeah, you don't beat the casinos on a regular basis. Okay.
So
So,
in the, sorry. what were you
I
gonna
was gonna say anything, I was gonna crack a casino joke. I was
say?
gonna see if Wynn Hotels were in our portfolio.
No gambling.
So we had no notes about the purpose section. In our initial discussion, there was a little bit of confusion about operating versus
Something like that.
reserve funds, the short-term reserve and longer-term reserve. I think that we've identified that it's pretty clear right now, the short-term reserve requirement is satisfied by about $2.5 million held in money market account with First National Bank, as opposed to their wealth management side. And the wealth management portfolio is this longer term reserve. The one thing we did talk about is in the shorter term reserve, adding insured cash sweep in the listing of acceptable short-term reserve instruments. Jason, do you have any objection to that proposal?
Not at all. And the rates you're getting on those cash sweep accounts are actually decent at this point. So
Yeah, I think we just did we had gone out for proposals and ended up in negotiations with existing partners. And we took back in like November of 2022, we took our operating ICS from 0.5% to 3.25%. And our money market from 0.3% to 3.37%. And that's all liquid funds. We were really, really happy with that. And so we've been seeing some great increases.
Not gonna last.
Yeah, I'm hopeful that I'm sure our relationship played a large role in that, because those were basically promotional rates. That we kind of saw from competitors. They didn't want to lose the business. I am hoping that we don't see a decrease in that unless there is a large drop in rates in the market that would basically force their hand, because up until that point, you know, I think there's an expectation that they'll maintain that for the relationship, because there's an established competitiveness in the market right now where we could get that from people that want our business.
Right, but in general, the market is gonna calm down. I believe it.
Yeah, I know Matt was saying he thought that the rates were still going up. Yeah, I don't know. Let's see.
No, he said rates will probably stay high, is what he
Fair enough,
said.
fair enough, yeah, fair enough. Well, as long as they stay high, I don't expect any changes to that
Correct.
from our partners.
Right.
So I will make a note that will include insured.
We filled Jason in on our piece on that we decided, you know, we didn't want to rock the boat with our relationship with them when we were working on our sweeps.
Right, there was a short conversation that had with the money market, or sorry, Bar Harbor Bank and Trust offered, I think it was like 0.10% higher, 3.35% on our insured cash sweep if we were to take all of our $2.5 million portfolio in the First National money market over to Bar Harbor Bank and Trust. The first problem with that is that ICS wasn't included in short-term reserve acceptable, the list right there. So we couldn't have done that. But it also, the 0.10% difference, we decided wasn't enough to ruin the relationship, especially when First National Wealth Management holds $10 million on the long-term reserve side. And then First National Wealth Management ended up actually, or First National Bank ended up actually beating their original cited, they had originally said, yeah, we can do that 3.25%. And then in the November statement, I believe I saw it was 3.37%. So they had reanalyzed after we had talked about and actually bumped that up. So we made the right call, because we wouldn't have actually seen any benefit from doing that at all anyway, and we would have ruined the relationship. So it all worked out really well.
Sometimes things do.
Just sometimes.
Yeah, thanks for that backstory.
Absolutely.
And we made a good decision. Never gonna go after, 25 basis points is a joke.
I think we had a little bit of discussion about reporting. I think that we're fine. So right now, there's this requirement to report an annual investment report no later than 30 days after the end of the fiscal year. A part of my analysis includes the reserve funds, and I kind of bake it all together. And, because of the way invoicing works that might attach to some of these reserve accounts, I may not get an invoice that's going to be applicable to that reserve for more than 30 days. And so that timeline doesn't work for the total analysis that I normally do. But I have no problem with providing a base level, here's the way that the actual investment performance worked, which I think is more in line with what that's talking about. So we had discussed it, but I don't see any issue with that reporting deadline. So I don't think we need to do anything about that.
So they're asking for reporting on the investments, not operations.
Well, yeah, and I think I've found it easiest to bake it all together because like on our portfolio analysis, I kind of have two sections, and we've gone over it in detail before, where there's the assets and then there's all of the assignments, all the claims on those assets. And the claims piece is the part where there's activity that comes in, over 30 days that gets retroactively accounted for, based on when the expense was incurred. And so that was the piece that I found problematic if I was going to just do the exact same thing that I do as quarterly reporting. But I can just expand it out and, just do an asset target. And those are available pretty much at the beginning of the month. So I can get it on an agenda for, probably the second meeting in July. I don't know when, Yeah, I guess it would depend whether or not we meet in July as to whether or not the investment committee would see that within 30 days.
But have you
Sorry.
spoken to the selectmen about this possible change in reporting?
I haven't spoken to them about it. I provided, at the end of this past fiscal year, I think I provided just an asset analysis, and then I subsequently provided the quarterly reporting that I normally do that's all encompassing. And so it satisfied that requirement, and then also still gave them the report that they're used to.
No one raised
And
it.
no, I'm not sure how deeply they look at that, because I give them, there's a lot of numbers there.
And there were other years we'd only meet in June, I'm sorry, in July ourselves. We
Right.
always waited after the end of the fiscal, and we met in July. It was always a warm day when we've always met in the past. The idea of meeting more often is something since you've joined us, and it's been good, I think.
Correct.
Well, it says this committee will meet quarterly, so glad we're doing it. I think one thing, just because it came up in this review, and we're talking about the investment committee, town treasurer and town manager participate as ex officio members. I don't know if, I'm not sure what the definition of ex officio is, but it might make sense to specify whether or not we can vote. Because I think in the past, I may have, seconded a motion to adjourn or something like that. I don't know whether or not we can count towards being a quorum, or
Is that like a 90-second call to Andy Hamilton?
Yeah, well, I don't even think it takes that. The ex officio one by its very definition.
is it? Okay, okay,
So I don't think we need to clarify that.
okay.
But
An ex officio is not a participating member of
Right.
the committee.
Okay.
it means you can speak, but you don't.
Okay, that's fine. I just want to clarify.
I don't want to spend.
They're basically sitting here as the finance director and the town manager, because they're hired hands.
Yeah.
And for the
Right.
same reason that why Brian, as a citizen can't be on the committee, and if it said, in our
Right.
imposed members, it would say the director of public works, then he would sit here again, so.
Right,
I think that takes out any of the fear.
right.
Okay. That's fine.
And can we have, if we're gonna work on our language, can we say up to 3 citizens? That way we can, still have a quorum.
Yeah, and we would just define a quorum as being a majority.
Yes.
Okay, because right now, I'm not sure that it's
Uh,
specified what a quorum is, but
Right, it should.
How it's defined.
Well, if we're gonna write this thing, we might as well specify that.
majority.
Member of the selectmen, member of the warrant committee, and 3 citizens, 5. So 3 will always be a quorum. Well, no, because
So it'd be, if 5 would be a quorum. I mean, 5 would be the full committee, so you could have 3 and still vote, because I've seen the board of selectmen's voted with 3 people.
Yeah.
So up
That's
to,
it.
right,
so a quorum would would be 3 people.
Right,
Or-
but if you change this language to say up to 3 citizens, then using a hard number of 3 doesn't work.
right.
All right, so we'll just leave, and 3 citizens, we'll leave that alone.
Okay,
Because we can always be searching for a new member, so I'm gonna continue recruiting, Jason. If you have any ideas of any citizens. I'll reach out to, I've sent an email to Megan Bailey to see if we can get her husband on board, because he's a numbers guy.
Right, I'll let you know if I can think of anyone.
So can you have a meeting, if you have a meeting of 3 members? 2 is a quorum?
I think what we were saying is that we're not gonna adjust that language about and 3 citizens of the town, so we're gonna specify that a quorum is 3 voting members,
Okay,
unless I misunderstood.
As long as we're legit that way, I'm fine.
yep,
I think that's probably the cleanest. I think it would be
That's right.
problematic if you start saying, oh, well, 1 person shows up, or, 2 people show up and, that's a quorum.
Right.
If the total board is at
5.
4.
And we met a lot as 3,
Right,
because a lot of times it was just you, myself and Brian and
right. I think that works.
Okay.
when was this last reviewed?
Let's see.
2016 was when it was last amended.
When 2016, so we're right on, here we
Right
are,
on
7 years later, it's good. Most ordinances we try to do in 5, so.
So social moral constraints right here, I think this is like a summary. So I think what we'll want is this will be spelled out here instead of none, but up here in the long-term reserve where it talks about this not to exceed 65%, we probably want to add the ESG language in there as well, right? Add 7 to 12% ESG.
Does it
I
spell
thought-
out the allocation elsewhere, someplace else?
Which allocation?
Our
This-
total bond, fixed income,
It has it right here, and then
fixed income. See, I think no, this is, I think, where you put the ESG piece.
okay.
You
So
don't need it up top.
don't
right.
need this. Okay.
And then I would confirm a phone call or an email to Matt Horton to confirm, is it, on record that was he rounding up today or is it at 3565?
Yeah.
Right.
And we can determine that, I would not lose sleep over 5% either way on both.
Okay, I'll specify that with him and I'll also go over these changes. I think we would want to make these proposals subject to, I guess, a sign off from First National, right? That they don't see a problem with it.
Right.
Okay,
Absolutely.
They're our partners. We don't want to blindside them or weigh them down.
Or micromanage them.
absolutely. Yeah, I think that the range, I know that he talks a lot about how much he appreciates having a range. So I think hopefully that'll be a good thing for the ESGs as well.
And he might say he's not comfortable with that for, 5%, and then we'll come back to that for sure. 8%, who knows?
When do we have to have this finalized?
So we're putting together warrant articles right now. I think that the final vote on all the warrant articles is like in mid-March. Early March.
Final vote date is March 14th. And we have to have all our business done by the 17th. For some reason, we had, snow or, weather-related problems that week.
So we could have another special meeting to review the final version.
I'm fine with electronic.
Yep, do electronic.
Okay,
thing.
and just if someone sees something that it doesn't jive with what we thought we,
When you have
Agreed
the
on.
final copy, just send it out to
Okay.
the committee and we can say, good to go.
okay.
So you'll reach out to Matt, we'll get the confirmation on the allocations. We've added the small language there to make sure he's good on that, and then we're pretty much clear, right? Because we really haven't made a lot of changes.
Yeah,
Oh, I see.
and I think that's all the areas that we had originally spotted to look at, and I think we've got firm proposals in place. Let's see. Include insured cash sweep as an acceptable mechanism for a short-term reserve. Specify a quorum as 3 voting members. 7 to 12% of equity allocation for ESG funds, existing ESG funds, most advantageous of that category. Anything else?
I think you're good.
Okay, then I'll take a motion to recommend those changes.
So recommended.
Seconded. All in favor?
I,
Thank you, Jake, for your good work on that.
Thank you.
Thank you all. Okay. Last item, business. Consider, well, actually not necessarily. Item 9, consider possible reallocation of assets. The only piece that I wanted to kind of bring to people's attention is when we had renegotiated the rates with Bar Harbor Bank and Trust for insured cash sweep, they that rate increase only applied to our general operating account, which is where, most of the money is. We do have other bank accounts. Some of them have, reasonings why we've segregated them and account for them separately, such as like, we have ARPA funds that are sitting in an account that doesn't produce any, interest. I think there was a requirement on that the federal funds wouldn't earn interest. We've got the capital projects account where the most recent bond issue is housed, set at the 0.5% rate to ensure, tracking on arbitrage compliance and all that kind of stuff. One category of bank account, though, that I do think might be appropriate to look at for a recommendation is we've got a bank account that was set up to all credit card transactions at the marina go through it. I think Kathy wanted a separate account for that activity. But if they have like a deposit, of checks and cash, that goes to the general operating account. All of that's tracked in, due froms between the marina and the general fund. I'm not aware of any reason why the marina bank account, like, all credit card transactions ever need to stay in there. And right now that insured cash sweep is at that 0.5%, and there's $857,000 in there. That I think, now you want to have it at least the level that it can make sure that you can take care of like the fees that get charged, the credit card fees that get charged on that side, but that's always going to be less than what you're bringing into the credit cards. So my thinking is that it probably makes sense to start moving some of that money over into the general operating account and take advantage of that. That additional interest.
In the marina general operating account. So basically, the credit card account and the general operating account for the marina will be a single account.
The marina does not have a bank account that's recognized within the marina fund. This is what I inherited. All of the it's all interfund receivable and liabilities between the general fund and the marina. Both of these you can see in the report that I've got up. This is all 100 fund general fund assets, cash and cash equivalents, and this is the credit card ICS. That's the
74,
marina.
right.
That all the activity in there is marina credit card activity. Now the corresponding of this is that the general fund owes $857,000 to the marina fund. But baked into the general fund, bank account in general, there's marina funds that also have the offset of, being owed to the marina. And we're earning 3.25% on those funds. So it seems like I don't see any reason why it would be problematic to move a portion of those funds over to get additional interest.
So much of this credit card business dates back years to when there was great competition to get the best processing fee. That's all gone away. Everybody's the same. Is there any reason the credit card money can't go right into our operating?
I'm not aware of one. It hasn't been something that I saw as like a necessary thing to change, because there's just procedures that are in place and they work. But I think this situation, now that we have the disparity in rates that exist, does call into question whether or not it makes sense. That is one option. The only other thing I had thought about is, I know Kathy was very cautious about, because I think a while back there was a fraud issue, there was a fraud issue where it was all reimbursed by the bank and everything, but we had to close a lot of bank accounts and reopen. And I don't know, this one may have been created during that time to segregate the activity from, when we're writing checks versus when we've got this credit card activity that maybe she saw as being more prone to fraud. I lean more on the side of, I don't see a problem with it going into the general operating account.
To me, the fewer accounts you have to reconcile at the end of the month, the better.
So we could just make a recommendation to close that account, move all the activity and start doing all of this out of the general operating account.
That would, I mean, if.
Well, as you can track it, for, again, as far as the way the marinas, you know, as far as the marina revenue is shown.
Yeah, that's not a problem. I think my only thing is I've actually been wanting to move more in the direction of actually having assets like recognized within the fund that, you know, it's targeted. I mean, so we had never had a capital projects bond account. We established that with the most recent big bond issuance for arbitrage tracking mostly. And, you know, it's been on my list of things that I think the marina probably should have a bank account that, you know, is recognized within the marina fund.
Okay.
That's where I was sort of heading, you know, is that, and can we still receive a good rate for that fund? You know, are we gonna be at 0.05 or can we get 327 or 337?
I don't think we need to park 800,000 in it. Long term.
Right. That's kind of what I'm thinking, like, maybe it makes sense to do a transfer over to the general operating fund just because there's a fiduciary responsibility to get as much interest as we can right now. And then put it on, you know, a future plan to reanalyze, you know, how we're keeping marina funds in general.
It's not, as I say, from an outsider's point of view, fewer accounts to reconcile. To me is always a benefit, but if you see advantage in keeping these things in different buckets.
Yeah,
We're not gonna micromanage that.
I
You're the
defer
one
to
that has
you.
to do it.
But
sure.
you know, again, I wouldn't leave 800,000 sitting at 0.05.
No, that's a bad
Either.
idea.
I agree.
Jason, the marinas run as an enterprise zone. We didn't understand that. So all the money that comes in for the marina, you know, afterwards is used for running the marina.
Yep, and I'm with JP. I'm all for consolidating and simplifying whenever possible, especially if consolidating and simplifying is going to yield you a higher rate of return.
It's there.
I do the same thing in every business I've gone into. I do just check with whoever the accounting manager is first, just to say, hey, is this going to create a lot of extra work for you if we consolidate these two accounts? And the answer is usually no.
Okay, so I mean, the recommendation could be just to close this account and move all activity to the general fund. I don't have a problem with that at all. I know in my past life, I did not usually enjoy seeing pooled cash systems because they were done poorly so often. Our pooled cash system works really well, so I don't have a problem with doing it. I think I created a bias towards non-pooled cash systems because I saw them done incorrectly so often. But we're already basically doing it with one category of transactions with the marina. It doesn't, to me, it doesn't make any sense to draw that line and put credit cards in one, but cash and checks in another. And so if we just make a recommendation, to close that account and move all activity, then I'll take care of all that.
Right.
I think it's a really good idea, and they, you know, and they charge fee for use of a credit card. If I'm
Well,
not mistaken, right?
Yeah, that wouldn't change though. That would, yeah.
So it's a win thing.
Right. Again,
Simplify.
we don't want to micromanage
Mhm.
you. It's whatever works best.
So I'm very open to it. There's a lot of things that I inherited that I would have done differently, but they just haven't risen to the level that needed to be changed yet. But this might be a good time to target this.
Listen, if it becomes a problem, we can always go back to it.
Right.
Yeah,
How's that?
okay. But if I have that recommendation, then I can work on the back end of actually the logistics of it all. And barring any crazy stuff coming up, can move forward with a recommendation to the board
Right,
to do
this would
so.
be this would be a BOS decision, not us, really. In the end, all you want is our blessings here.
Yeah, right.
Correct? That's a board decision.
I think because of the difference in rates, and change in current practice and everything, I think it constitutes in the investment policy, there's language about a reallocation of funds would be proposed by the investment committee and, you know, accepted by the board. And so I think that's what pushes this over into that category.
Good, I'm good with that.
I'm good with that.
Yep, me too.
Okay, then I'll take a motion to recommend closing the Marina credit card account and moving that activity into the general operating fund.
So moved.
Seconded.
In favor.
Any further discussion? Unanimous. Thank you for explaining that, and I think I think in the end, it's simplified and, you know, it's a good whack of money.
Right.
Basically, you make the fees, you made your credit card fees back,
Right.
even though you charge the client, so there you go.
Yeah. Okay, so item 10, any other business?
More recruiting, I'll make those recruiting calls, you know, we talked about that earlier, that'd be the last thing that, again, I'm comfortable, you know, originally, I don't think we ever had a full 5.
I can't recall.
I can't recall it, so if I can get one more, we'll take it from there.
Right.
And I also want to thank you, John Brown, for being really, really, you know, helpful in guiding us through the last 5-6 years. And how long have you done it?
A long time.
Longer time.
Carolyn was on the board, selectman,
Oh, yeah, back in the 70s and the
No.
90s.
90s.
Yeah, I
Right, so-
stayed till 92.
So he's been doing it almost 30 years.
Easy.
I will draft an email resignation effective April 1 to all of you. So,
I'm sure you want to go to politics.
Looking for a town manager.
You can kill.
I'm staying out of politics in Bar Harbor.
You better run because they took the finance director and made them.
Jake is acting in case anything happens to me today, then he steps in until they have an interim.
I asked Chief Willis if he knew where he was. So let's adjourn, then we can talk. We'll wait till he comes back, but yes, he says he's still in Trenton.
What happened?
The town manager in, you know, Sutherland.
Yes,
He's still, you know, he didn't move away yet.
right.
But, you know, you got a kick me sign on your back, you know, it's
Bob, particular, so.
tough group. I like the board. I mean, I kind of like a lot of people on the council. I think there's a good group there. I mean, I have 3 very good friends on that council and it's tough, you know, I think they're faced with some huge decisions of $67 million to redo the school. That's, you know,
Yeah,
that's a
that's-
hard pill. They've known they had a problem for 10 years.
Longer.
You know, making a lot of money off the cruise ships and keeping all your businesses happy. That's, you know, very difficult. Things that we don't have. They used to want to bring the American Cruise Line here to town. Some of us were proponent of that. It would have been a really good thing for Main Street, and they got the fish, a lot of the summer families got the fishermen on their side, and we don't have cruise ships anymore.
We only had one.
We only had, we had 2. We had the Seabourn Pride used to come here. Used to come up the south. It was amazing.
Crow Nest or whatever it was.
I'll make a motion, we adjourn.
Thank you.
So moved.
Thank you, Jason.
Thank you very much.
Thank you.
And guys, now that we're adjourned, can I just ask one favor? I'm gonna be leveraging a lot of